Hello, Mark Sturdy here with another snippet from our weekly analysis on 7 days ahead. And this week, looking at the summary, you'll see that nothing much has changed insofar as we remain excited by stock markets worldwide, S&P 500, Euro Stoxx 50 and the Nikkei 225. The S&P 500 and the Nikkei 225 have been we've long been bullish of the 225. The breakout of the S&P 500 through its prior high has been quite recent too. The Euro Stoxx 50 is the latest newcomer to the bull ranks in our view, and I just thought it'd be interesting to go through exactly our reasoning here. It is, as we know, the superseding of prior highs that bull markets establish themselves. They leave themselves higher because once superseded, a prior high should act as good support on any pullbacks. This is the case, we think, here. You could argue, potentially, huge double bottom. I'm not sure about that. Possibly. But in any event, we have in the monthly continuation chart a good breakup through 4608 in the Euro Stoxx. At the end of last month, which is just 4 or 5 days ago. Look more closely and you'll see that the market in fact superseded the recent highs of 45.30 and 44.09, and then did that classic thing of testing the nature of that breakout, i.e. the range of support between those two prior highs, the band of support, pulling back and finding support. This sort of price action is the classic endorsement of the breakout that all technicians require. The breakout is one thing, then we want it to be tested in the sense of, will it pull back through it? No, there is good support and the market pushes on. That's the weekly chart endorsing the big picture. Short term, the Euro Stoxx is bullish. First of all, we have the March futures chart, unlike which is not the continuation chart, a similar picture. Having superseded these two prior highs, this should now be a band of support from that prior high and that one across here on any pullback. Let's see what transpires. The very short-term picture is one that the bulls will like too. The once above 46.34 in the March contract, you'll see the market broke up, came down, tested the prior high support in the daily chart, this is, and bounced. Precisely the sort of price action that bulls will be looking for, and the way bull trends lever themselves higher, pivot higher on the support from prior highs. So all that is good and bears comparison with the S&P 500, the big dramatic breakup through 4800, and the long-standing bullishness of the Nikkei, the breakup in particular there of the 3720 breakup which is pulling ahead, driven by these other patterns. We like the S&P, we like the Nikkei, and we like the Euro Stoxx 52. Thanks very much.